June 2025 U.S. employment report released this morning showed that non-farm payrolls increased by 147,000, surpassing economics' expectations of 110,000 new jobs. The unemployment rate held steady at 4.1%, which was better than the anticipated rise to 4.3%. This signals that while the labor market is cooling compared to earlier in the year, job growth remains resilient. Key details: payroll growth was 147,000 jobs added in June versus 110,000 expected. The unemployment rate was 4.1% versus 4.3% expected. Average hourly earnings are forecast to rise by 0.3% for the month after a 0.4% increase in May. Private sector jobs: ADP reported a drop of 33,000 private sector jobs in June, the first decline in over 2 years, suggesting some sectors are showing more weakness. Pre-market reaction: stock futures are steady to slightly positive after the report, with Dow, S&P 500, and Nasdaq futures holding near flat or modest gains as investors digest the data. The stronger-than-expected job growth, combined with a stable unemployment rate, is being interpreted as a sign the U.S. economy remains on solid footing, though the pace of hiring has clearly moderated from earlier highs. Investors continue to anticipate potential Federal Reserve rate cuts later this year, as the overall trend points to a gradually cooling rather than collapsing labor market. In summary, June's jobs report beat expectations with 147,000 jobs added and unemployment steady at 4.1%. Markets are reacting calmly as the data supports hopes for a soft economic landing and keeps the prospect of Fed rate cuts alive.